We've known each other for a long time. I think it goes back almost 20 years. These are what you call the goats of the industry. Um, I'd like for you guys just to kind of introduce yourselves and tell the audience here your level of experience in commercial real estate. I worked with both of you in Cushman Wakefield. Keith was actually my boss at Cushman Wakefield, in charge of all the top producers of capital markets. So he drove us to produce close to $20 billion a year in business. But I wanted you to just kind of introduce yourself so the audience has to know your background.
Sure. Thanks, Ed. Yes. 22 years ago, I think we said that I found you at a conference. You remember this part. I didn't. And I said, what are you doing wherever you were? We'll leave that name out. And then you ended up starting the whole office for us and Cushman Wakefield in Houston when it turned into great success. So thank you. My background is in 3 leading large brokerage operations in 3 firms, Grubb and Ellis. Now we're going to go old school here with Darrell. Darrell and I worked together at Grubb and Ellis and for a little bit at Cushman Wakefield. And then Cushman Wakefield, each place is more or less 10 years, believe it or not. And then most recently at Berkadia. In between some of that, I was major institutional transactions leader at Aimco, Big Partly REIT, and then also institutional fund portfolio management and investor relations at Abacus Capital Group. So that was ultimate institutional. When they go down the hallways in their offices and your footsteps would echo around. It was quite amazing. And now I'm in an entrepreneurial stage of my life, so I get to do stuff like this new. I'll talk about why new and exciting, and then I invest in really old school mobile home parks. So,
yeah, good yields.
Oh yeah.
Yeah, thank you, Ed. Thank you, RedSwan. I also worked for Keith. It's a small world. What a great, powerful position right here. I mean, you look out over the trillions of dollars of real estate that surrounds us. And what's exciting is we're at the doorstep of the next financial revolution. So I just turned 60. I was supposed to be in the Gulf Stream, just buzzing the city by 60. So I got another 10 years to get it done with Ed. So I go back with Ed and I were together at Cushman Wakefield. Keith and I were at Cushman Wakefield, as well as Grubb and Ellis. I've been doing this for 35 years. I'm with a group called Avison Young. We're a Canadian-based full-service commercial real estate company. Offices throughout the world, about 4,500 people worldwide. I've got a team of 8 people. I'm based out of Houston, Texas, but I cover the world. I travel the world. And we've been blessed. We've done $12.5 billion worth of deals. And we're entering a new stage of real estate and value, 400 trillion of value, the biggest asset class in the world that, guess what, has been illiquid. 95% of the people have not been able to participate in traditional real estate. It's probably a big number.
Yeah, we couldn't sell to any of them, that's for sure.
Right. And so I think that's what we're at the doorstep of understanding, is how to raise money in commercial real estate. And real estate is an illiquid asset. And that's where the arbitrage has come up with that's benefited a lot of us, because you can pick up a piece of real estate, people haven't looked at it, and they're like, we think it's worth this. Well, no, you buy it for 100 million, you sell it for 250 million. Made a group of investors a year and a half ago in infrastructure. I made them $120 million in 1 year. That's just because it wasn't known to everyone. And this is what tokenization is going to do. It's going to make the markets and money come to real estate that allows everybody to invest, increase the value of your current holdings, and also have you the ability to be able to go and buy new assets. And so it's exciting time.
Well, Darrell, we've talked several times, and recently we started talking about blockchain technology, and I saw your eyes lit up when you really understood what we were doing here at RedSwan. But based on all the experience you've had in real estate, what made you decide to come work with RedSwan as a distribution partner? What do you see in the industry and the market that you think is going to be very exciting for jumping in?
Absolutely, it's a great question, and it's liquidity. We just went through after COVID, and then I said for the last 15 years, 20 years, interest rates have been basically zero or next to zero. And I said, wait until this thing goes back to normalization. And that's why we've seen the distress that's occurring in real estate right now. So when a firm comes and hire us, right now I probably have $5 to $10 billion of the properties of market. And a lot of those are AI. but a lot of office buildings, a lot of traditional land deals, hotels, retail centers, industrial, traditional. But when somebody comes and says, Darrell, we want you to take our asset to the market. Well, my job is to go find, I call it threading the needle, is to find the needle in the haystack. Well, one of my jokes is I don't sell to buyers, I sell to lenders. And that right here is what we're recreating. I don't sell to buyers, I sell to lenders. Now we create something that we can actually sell to buyers, because now the liquidity is 100 times, 1,000 times more, to where me calling on a client that I've done billions of dollars with over the years, now I can have somebody the street walking down saying, that's a cool hotel, I'd love to own that. And they can buy a share of this with a click of a button. Well, if I can bring that platform to my clients, I'm increasing the value to my clients, therefore justifying my existence. And so that's the number one way a traditional real estate broker can bring more value to the client we represent.
Awesome. Keith, you've been through a lot of transition in real estate for years. So you've seen the good, the bad, the ups and the downs. What made you decide to work with? I know I talked to you about joining our advisory board and you said yes, but what makes you excited about working with us on distribution as well?
Well, what's exciting about is a little bit go back to you got to embrace the new and then drive towards the new. And there's a bunch of stories we'll talk about here in a minute, but I'm at the stage in my career where big companies tend to go in a singular moment and they try to be agile. And I'm glad I'm not at those wonderful big companies. Like my career is based on them. So I love that, but I like the agility and the looking around the corner and saying, well, what is coming and what's coming fast compared to 2 years ago to right now, which was happening into this is just embrace it and understand it. Take your time to understand it, embrace it, and then work with people that are already ahead and been in it. And these guys have been in this for 6 years. When you first did this, me and others probably pulled you aside and like, you okay? Got everything going on right? Everything good? Because he was very successful in we'll call the traditional real estate that was referred to last night at dinner several times. And I represent traditional real estate here today.
TradFi.
We could start to do that if you want. Okay. And Ed was kind of like, we are going digital in this stuff. And I believe it so much, I'm changing my career. So imagine how many times they've explained this, and now it's going to get a little bit more acceptance month by month, not year by year. So I'm excited to be part of it and help it grow and get the gray hair folks on board.
So Keith, you probably, just like I've been talking to real estate owners, bankers for the past 8 years about tokenization, and 90% of them don't get it. Many of them think I'm talking about Bitcoin. They think I'm talking about anything other than real estate, right? And sometimes it was uncomfortable because people don't like to admit they don't know something. What misconceptions are you hearing, and how do you feel that you can help to change those misconceptions?
So first off, it's not crypto. Okay. And then people go, well, I knew that. And I'm like, no, you didn't. You thought it was crypto. And then I have to ask them, and I plan on, as I talk about this more, I was like, and by the way, what do you think crypto is? Because everybody thinks they know what crypto is based on the last news cycle or the last craziness or the black swan that happened or whatever. They that crypto, and Warren Buffett doesn't like it, so I don't like it. It's like, well, I don't. The world's changing, so understand that it's not crypto. It's based on the technology that enables this stuff to happen on the internet. There's great experts going to talk about that later. But understand that there's transparency now and there's compliance. These are securities, just like any of the securities the well-heeled people down the Wall Street market and create and follow rules and have things that make sure it's not nobody's taking advantage of anybody, or if they are, they're going to be able to see it and be able to go get the bad people. Bad people still happen. It's much safer. If it's all the way they say it is, which I believe it is, the whole blockchain is much safer. So the misconception is that loss of control also. It's like, well, I don't have any control over it. It's like, actually stop and go step by step and learn the realities of the situation, and you'll probably have much more transparency and control than you do now. You might could go into war with.
Excellent response. So Darrell, we've been structuring deals for a long time. I consider myself, back then, an investment banker for capital markets. I mean, we're listening to our customers, understand what their problem is, and then finding a solution, which is usually bringing capital in. So based on your experience and knowledge of tokenization, how do you see this like helping you to structure deals for your clients in the future?
It's as it's night and day. It's that big of a change, and it's allowing people to invest in an asset class they've never been able to invest in. Most Americans, most people around the world, really the only real estate they invest in is their own home, beyond their own home. And that's, you look back, that's where most individuals make their best returns, is their own home. Now that person has ability to invest worldwide into assets. And so now all of a sudden I can take my position in a real estate asset of this building, and now all of a sudden I have a depreciating asset that I can write off. So unlike a stock, now I've got an asset that I can own and do other things and take write-offs, because I'm a cost segregation point, if I'm saying it right, of the capital stack. And so the first ones are going to be the pioneers, and everybody's going to look to them. And those guys who jump into this big time early on are going to reap the most rewards, in my opinion, because the returns are going to be better. And so they're going to be taking these new assets to the market and getting higher returns because there's more liquidity going after it. But when this thing fully blossoms in 3 to 5 years, I actually probably think it's less than that.
I think so.
Things change almost by the week, it seems like. Definitely monthly. That when people start to see this happening, this gentleman right here in RedSwan is going to be at the forefront of it. They're going to be the godfather of tokenization of real estate. Can I say that without getting in trouble?
You can say it. You just said it.
No, but it's like everything in life, it's like, yeah, it all sounds good, but let me see it in action. And I think when you really start to see it in action, that you're like, wow, this is something exciting. And it's what crypto and digital assets, when it first came out, people couldn't really understand it. Now, when you look at crypto and Bitcoin and how it's a foundation, what do they tell you every morning? Gold price is what Bitcoin is. That right there has made the whole industry change. And now this new wave of transferring value through new ways of stablecoin and other instruments other than just the US dollar, and me going down to the bank and trying to raise some money, it's opened up the whole world by your phone.
Thank you, Keith. So you're an entrepreneur now. You left the brokerage industry. You're on your own, building a business, like you said, me, myself, and I. And how are you now using this tool? How are you talking to your clients about using this tool to kind of take advantage of the opportunity?
Yeah, good question. I'm learning, and so I'm going to things like this. I'm listening to podcasts. I'm watching all your old webinars you've done. I'm making sure I'm learning before I start to go to people, because what I'd like to do is actually spool up an SPV. Because what I do in the manufactured housing space is I am an LP investor. I spool accredited and high net worth money. We invest however much we can pull into an entity that I'm the GP of, and then that entity is the LP in the syndication or the fund. The owner operator's going to go be experts at what they're experts at. I would like to have that SPV be based on tokenization aspects now. So I kind of lead by example, and then I'm going to research it all, and we're going to try it out. We'll probably try one.
Smart. So you're going to get involved yourself and actually create SPVs that you can actually bring investors into, assets, and make terms that are.
And as I get better at the explanation and the vision and have more, I have comfort, but I have to be comfort about being able to true advocacy rather than, I'm pretty sure this is happening, I think this is good, let's pass that. I've seen it in action. I've worked with these people, to the general partners, like, you should actually tokenize part of your assets too. It just can't, I think you have to go step by step. You can't, I know you want us to do the whole thing all at once.
For sure.
But one of the ways we did great things at the brokerage companies was we didn't try to boil the ocean. We actually got better at strategy, and we get better at step by step of being more effective to the right clients at the right time, and then growing from there.
Yeah, it was your leadership, I think, that made me a better person in terms of brokerage, because, it was, not just charging out there and just trying to sell things to people for no reason. It was really understanding the situation and coming to a solution that made everyone happy. So, Darrell, you have a lot of billionaire clients. I know that, family offices. And so I'm wondering, now that we are tokenizing a lot of assets and more assets going to be tokenized, how are you going to convince some of these large family office clients to invest in tokenized real estate as opposed to the traditional real estate they've been buying?
They're already seeing it. Because I have so many assets, everybody calls us and my team. So I'm in a very unique position of taking calls. I'm in the control tower. I see things happen 6 months before the rest of most people see, because I can see when properties are starting to go in default and on the watch list. And so how does that translate into the liquidity we're talking about? Is I'm already talking to some of my big owners about, let's put this into a tokenization. And because I'm bringing this up, because liquidity is difficult, because raising funds are difficult, because, that back to the beginning of time, you had a very small group of very wealthy people. You had to control assets, where today, if you can present yourself and this, we know deals. I can sit down with you and give me 5 minutes. I can tell you if the deal makes sense or not. And so, yeah. And so my guys are excited about now us having the ability to move much faster. And that's probably one of the biggest things, is we can do this in weeks now versus months or years. I've got a land deal that's going on 3 years. But then we've got some other deals that are going to go in 3 weeks because the returns are so high. So they'll see it by example, but I think getting in early and putting your money in some of these deals, you'll be able to go raise more money and be able to go do more projects. And Keith, you said it exactly right. Now we're in the business of owning real estate ourselves, because we've been doing this the last 35 years of our life. So if I find a great deal, now all of a sudden I call up Ed and I say, we should put this deal together. It's going to make X returns. The market hasn't seen it yet, and we're going to be able to raise money, and it's going to pass those returns on to the people putting into the deal. It's exponential.
Entrepreneur. And Keith, you actually signed up to help us recruit real estate brokers to help us with increasing the size of our distribution channel. And you yourself have a license now. You're SEC representative, so that you can partake in the commissions on these transactions as well. How do you see influencing others, brokers who are not aware of this industry, to get involved?
Yeah, it's just kind of more of the same as embrace the change and first get very eloquent and succinct at explaining what is happening and how the value fits into their clients. And if they don't start doing this, their competition is. And so they should just get started on it now. And I can role play with them. And I mean, again, this goes back to my mentorship coaching, coordination of large individual type A groups of brokers that really wanted to do their own thing. I got them to actually turn and face the same way and march in the right direction, at least for the most part. Same thing again. I'll just use the same skills and the background that I have. Is it's like look, when we started marketing properties and I was at CB before Grubb and Ellis, we didn't have an email program to market the properties. We mailed everything by the U.S. mail. Okay, so that's how long I've been doing this. And then the internet showed up, and somebody goes, we can, these people. Okay, and so that changed the whole dynamic. And there's a lot of people that didn't even have computers in their offices. And I was an analyst, so I got one. That all changed. The same thing's happening now. It's just different. It's internet based, but it's at light speed, and it's actually changing and disrupting what's happening down Wall Street. That there's going to be kind of roadblocks and moats to get over, planks to watch, because it's disruption, pure and simple.
Pure and simple. Darrell?
I'm just busting up laughing. I guess I'm the oldest guy in the room, because I can remember.
Quiet.
I remember we would go out on a new property, and I had a stack of flyers, and then people would send back the CAs, and then we would send out a stack of actual OMs. Yeah. I mean, and we'd have to go down the post office, and now I can do that in seconds, and I can have them around the world, and I get an immediate response.
You chase the FedEx guy. Remember, you'd have to chase the truck.
Yes, absolutely.
Not to mention that we had to pay $10,000 for those OMs to manufacture, and now we can do that for a fraction of the cost, right? So your team
in 1990, that's $40,000 today.
Your team was extremely excited about this, and that you told them that you were going to start getting involved in digital technology. talk about that too, how you're going to influence others in your organization. Um,
Absolutely. And I'm going to get my Security 7's license as well, so I can join and be part of the deal structure and pass that through. But what it does for my team is it provides more revenue for us. It's all about deal flow. And so we can get more listings, we can close quicker, and we can expand. And so then I can start taking my team and put them in. I'm based out of Houston, Texas. I don't know if I said that. And then put them in Austin, put them in Dubai, put them in Istanbul, Turkey. I mean, those are people I've talked to this morning. I mean, the world is our oyster, right? So now I'm able to allow my team to benefit and the returns and making money more than they could ever make, because the way we used to do it, if you don't change, you're just going to talk about the good old days. This is about new tools, new technologies to go out there and get in front of smart people and make returns. And I think you're going to see returns in this tokenization early on be very strong. We see interest rates coming down, and I think it's going to add to it. But having liquidity, and that's everything.
I'm excited because these two, and I guess myself is included, are, I think, one of the most sophisticated real estate brokers in the industry. And for them to get equally as excited about tokenization in real estate as I am, to join and start selling and seeing this as a new opportunity really makes me feel good, because distribution is what's going to kick this off. People trust his advice. People listen to his advice, as well as Keith, as well as myself. And for having them out there knocking on doors, preaching about tokenization, tells me that it's going to get done, because they're successful 90% of the time. So, go ahead.
The only thing I was going to say is anyone, when you're talking to people about it, I try to step back for a second, listen, ask questions, and then I advocate for the topic, sell the topic. You got to let the people bring it. They're going to go, what? It's crypto and all that. You got to go all down through that, and then just advocate. And it takes time. It takes a minute.
Keith is always teaching, but you're absolutely right. You're absolutely right. So I'm going to open up to any questions from the audience for these gentlemen here or myself. We'll give a few minutes for that. Yes.
It's been I've been following the asset class almost from day one. Actually, when you guys were trying to put that together back in, it was late
2018.
18. You're right, and I was an advisor to one of these entities that you guys use to do it. Key question: when you tokenize the asset for the eligible investors? Are they specific clients? Do you have to be a Reg D, Reg S? How do you guys handle that piece of it?
Yeah, that's a good question. So we are authorized to sell private placements with the SEC. And so we can sell to U.S. citizens under Reg D 506C. So those are all people who are accredited investors. They go through a KYC process. Everyone has to go through a KYC process to make sure they're legitimate. But then they also have to be accredited investors here in the United States. Hopefully, with some projects, we're going to do a filing for Reg A plus, so we can open that up to non-accredited investors as well. But I think right now, as things kick off, we want to focus on, at least here in the United States, we want to keep our license in check, is to focus on those accredited investors that are very serious about their investment and know what they're doing with their capital. But we're also, pretty excited that Reg S, which allows us to sell to international investors, is wide open. There's no limitation in the number of investors we can bring in on Reg S. There's a KYC process, but there's no requirement for accreditation. So we see this as a huge opportunity for international investors. And we have Japanese investors that have been tokenizing for past 4 years, billions of dollars of real estate, especially in hotels. And they're now coming to the United States because they see higher yield in the US. So they can tokenize here, say take a 7% return, pass off to their retail investors for 3 or 4%, and still have an arbitrage of 2% that they put in their pocket, and just keep rinsing and repeating that process. So I think there's a lot of demand overseas. And we travel a lot to talk to these these individuals, these institutions, these family offices. So I think a lot's going to come from that direction. But also, we see a huge market here in the United States for family offices, institutional investors, high net worth investors that want to diversify their portfolio.
Thank you. The only thing I'd add, I'd stay with 506C and maybe B, but you just stay with what's working right now and bring this to what's already in play so people can understand it better, because it's going to be so different already. Put it into the existing frequency and then branch from there. And you can do anything. Could you imagine? Let me just say one thing. I thought we were talking about it earlier. You're selling a property, like we do this all the time, and you say, well, it's a core plus property. It's going to have this IRR if everything works out. It's going to have this cash and cash and all that stuff. And so you have to go find an investor to buy that whole thing that wants that particular style of pie. Okay. But you could take this thing and say, well, how about you want to buy the cash flow portion? And how about you want to buy the IRR portion? You separate it. You can do anything you want.
Very true. That's the thing about digital. I mean, there's 100 ways that you can take a piece of real estate and make profit from it that you can't do with traditional real estate. I think once people understand that and that starts to set in, they're going to see everyone buying this kind of property. And that's why we're in this business. Any other questions regarding?
See, think about this. For family offices and individuals, you now have the ability to control your exit and your IRR. You don't have to wait for the GP to do it. Let that sit in for a second. That's everything. So when you see the perfect time, say, well, no, hell with everybody else. I'm gonna monetize this thing right now, because you can make that choice. That's what's gonna. I think this accelerates even faster. We're talking about, because when they see the flexibility inside the capital stack, the debt and the equity, that's what they'll catch on to that very, very quickly and have the liquidity. I need shirts that say liquidity.
Liquidity, for sure. But, it's even you take a simple pizza pie, and because you can divide it into 10 slices, that $10 piece of pie now becomes $30 because, a person is willing to pay a little extra for a smaller slice, right? They may not pay for the whole piece, the whole price, but for a smaller slice, if they're hungry, they're going to pay $1 more for that extra slice. Same thing goes for real estate. For this building, to get this view, to get this income, how many of you have in your portfolio something like this in your portfolio right today? So to get this slice of this property or any other property that we're selling, I think is important. And I think people are going to realize that that's an opportunity. Any other questions? Go ahead.
That's a great question. I've had that question asked for me.
That's a great question. I've had that question 1,000 times as well. And, we use the same lawyers to put together the PPM and the shareholder agreement. So just like you have capital calls on your 506C assets right now, the same methodology works for tokenization. It's just that now there's more investors, and that capital call is probably a smaller bite than if you had 5 investors in a capital call of $5 million. They're not going to be happy writing a check for $1 million, and they're probably going to wind up getting diluted. But if you have, $5 million capital call and you have, 300 investors, that's not a big bear for them to, pay into. And so, but they are required to either pay in or they get diluted, so you can sell it to somebody else.
All this is on the blockchain, and everybody can go see who the people are. And right now, it's all papered in some DocuSign document and somebody's file in the cloud. So it's the same process. There's nothing different.
Same process. I saw a hand back there. A couple more minutes on that.
Hi, I met you for many years, so thank you for coming to New York. Finally, I meet in person. So I'm a developer here, and so the question first of all is that does that apply to like ground up the development? So secondly is like if you have this tokenization, how is that different from what we have, which is like crowdfunding and other kind of like towards more like small investors? Like, what is the differences?
Sure. I'll take the second one first. So, the difference is the crowdfunding. Yes, you can slice up the pie, and that's been very successful since 2012 when they passed the Jobs Act, but they don't have liquidity, so they can't sell their shares. They're still stuck with the property long term. And some people get offended when you tell them that you're going to have an IRR in 5 years at X%, and you got to exit. And then COVID hits or the interest rates go up and you can't exit. That's a problem for that investor and usually a problem for the sponsor. But in this case, they can take their shares, put into an exchange that we have, or, pretty soon NASDAQ will have exchange, London will have exchange, and they can sell their assets off at the market level, which I think is exciting.
Does that resonate? That means crowdfunding. I used to think crowdfunding was a game about 3-4 years ago, but it's going to change everything. It's going to make crowdfunding, it'll be 100 times bigger because you can get in and out. So you're no longer restricted. And so the world is your marketplace to go raise money. Or crowdfunding, it's limited.
And on your first question, we don't do development ground up right now. We're trying to keep the risk level very, very low. So we're looking at only stabilized assets that are already generating income because we want to make sure our investors don't have to worry about a lot of risk. And sometimes with development, and I know there are a lot of great developers here as well as in Texas, but there is a little bit of risk in inherent in development projects ground up. So we rather at this early stage bring success by delivering a property that's generating 8%, 7%, 6% cash on cash, and an investor buying into that is going to get that return, as opposed to maybe a development where they have to wait 3 to 4 years before it's developed and then another year before it's stabilized and then cash flow starts coming out. So we're going to take our time and just focus on stabilized route and then later on get into development projects.
Great question.
Manuel, question.
So, as what so let's say what the
Yeah, there's structures that you can do it that way. Again, we're trying to keep the model simple. I think if you start to take an apartment building with 100 units and you sold off, or you sold each unit as a tokenized unit, and then you have, 100 people buying into one unit, and then you have to worry about renting that one unit to give them cash flow. And then you have to worry about 100 people renting their units to get cash flow. It becomes kind of confusing. We like to just take the whole project that one owner that has a great reputation of running. Matter of fact, we have that here, right? You'll see one of the properties is Olympus, and also with Hadar Goldman, with Oak Park. These are full apartment buildings that are stabilized. They're making good cash, and so to tokenize that and allow people to come in, they won't buy a unit, but they'll buy shares of the equity of the LP investor. And now they're just getting cash flow from the property as well as capital gains. Exactly, on a pro rata basis. It's just easier in terms of the math and keeping track. And like I said, we're trying to be as successful as we can right now by doing the easy route so that people have success. If we make it more complicated, it may not be as successful. It may not be so easy. But great question. One last question, and that's it. Then we have to move on. But go ahead, sir. Good question. I get that question a lot. So here's the answer: is that REITs are a centralized entity. You are really investing in a brand. You don't really know exactly, and many REITs don't know exactly what you're investing in terms of how many assets they own, the management of the cash flow. You don't know where the income is going. And then also when you usually enter a REIT, you have a load fee that you pay to get in, which sometimes 5, 6, 7%. And when you exit, you have a fee that may be 5, 6, 7% as well. Well, with blockchain, it eliminates all that costs, those fees. And also you're now in control of holding your assets. So you're picking this building, you're picking a dozen apartment buildings here in Manhattan that you own a fractional share of. You're getting financial statements every quarter of those assets that you own. You're making the decisions as opposed to letting someone else make the decisions for you. And your money that you invest in goes directly into the shares of the assets as opposed to being chopped up by toll takers. So
The REIT business democratized real estate investing in large commercial real estate. That's why it was created. So it's very similar in that regard. This accomplishes the same thing, but more granular.
we actually had a healthcare REIT. This is a public REIT called us. And this is CEO says, Ed, I'm thinking about tokenizing. I'm thinking, well, you're already public. Why do you need to tokenize? And he said, because, things aren't going so well right now. We can't sell the assets we bought 4 years ago. The price point is a little bit lower. So if we sold it, we wouldn't make a profit. In some cases, we might make a loss. And so if we sold it, then it's going to have a direct negative impact on the REIT's value. And so if we issue shares to raise capital to buy more properties, we're diluting the shares value as well. So these are his concerns. He didn't want to lose the value of the REIT because, it's public, it would go down pretty quickly. So he thought, well, if I can take some of these assets that we own 100% of, and we can sell off 49% of the equity of those assets to generate cash flow at the current price, and they think that they'll get a higher price by selling it in pieces, as I mentioned, then all of a sudden, we still control the asset. We're bringing in revenue that we can use now as capital to buy new assets. And then the current asset could possibly go up in value when interest rates come down and everybody looks like a hero. So this is another way they're using, a public REIT is using blockchain tokenization in order to take care of some of their
Many little sale leaseback.
kind of, yes, there you go.
Really kind of what it was.
Yeah.
This asset they own, and it's like, well, I want to pull some money out of it. Same thing.
Exactly.
It's just arbitrage.
There you go. So I think there's, like I said, there's 100 different ways you can actually monetize a tokenized asset that you cannot monetize on a non-tokenized asset. Well, thank you, gentlemen. I really appreciate your comments. It means a lot to me to have you on this stage, and also it means a lot to me to have you guys working with us at RedSwan. So I'm looking forward to the future, and I'm just so happy to be back in action with these guys.
It's awesome.
Thank you.
Thank you, Ed.
Thank you very much.
Yes.